Hello, everyone. My name is Crystal Comber, and I'm the CEO of SlickTrade.net. In this presentation, I'm going to go over an introduction to Forex, some basic terminology, where Forex originated from, and this is going to be part of a series, so each part is going to get a little more in-depth on the Forex market. I'm going to teach you how to trade it. I'm going to teach you how to install some different charting platforms, and ultimately, be successful with Forex. So let's get started here. I just recorded this, so I actually want to make sure. Okay, it is seeing my screen. Recorded it and didn't even have my screen up. So before I get started, please feel free to pause the video and read through this entire disclaimer. But when trading any financial asset, there's a possibility that you may sustain a partial or total loss of your investment funds. As a result, it's advised you should never invest with or trade upon any money which you cannot afford to lose through this manner of trading. Trading involves a real risk of loss, and past performance does not ensure future results. A brief introduction to Forex. Forex is known as the top place to trade currencies. Because of this, Forex has become one of the largest liquid financial markets in the world. There is over 4 trillion traded every day in the Forex market. And the best part of all of this is that the trading is conducted OTC, also known as over-the-counter. In other words, you get to do it in the comfort of your own home or anywhere that you have an internet connection, including on your mobile devices. I'll get into that later, though. Historically speaking, only large financial institutions, corporations, central banks, hedge funds, and extremely wealthy individuals had the resources to participate in the Forex market. However, now, with the emergence and popularization of the internet and mainstream computing technology, it's possible for average investors to participate. Some brokers only require you to deposit a minimum of 100 to 250 US dollars. I don't suggest that necessarily, but it's pretty neat because anyone can be trading this now. And I'm going to tell you right now, I cannot say this enough, and you will hear this from me multiple times, okay, over our upcoming sessions. But the Forex market provides plenty of opportunities for investors. In order to trade profitably in this market, currency traders have to take the time to learn about Forex trading and dedicate enough time to practice what they've learned. I don't care if you join a signal service, if you found the magical indicator that's going to tell you when to buy or sell. I don't care if your friend is extremely successful at this and you're following in their footsteps. You need to learn good risk management. You need to take the time to learn the strategies. You need to take the time to learn a charting platform of your choice or multiple. And you need to demo. You need to have a practice demo account. They're free. The trading platforms are free. The demo accounts are free. Okay, I don't suggest trading them if you're only going to be depositing $500 into your first live account. I suggest you trade according to that size. Do not trade like you have $10,000, like the play money that they give you. Okay, learn and focus. When you are successful in demo, go live. Until that point, don't go live. 90 to 95% of all Forex traders are unsuccessful. I heard another statistic a couple weeks ago, and it was that 95% actually blow their entire accounts. Okay, so I cannot say it enough. That's it. Learn, practice, demo, know what you're doing. It is not difficult, and it does not take long to learn, okay? It's just like going to school. I have a good example actually. If you were to go to a surgeon, would you want someone that's following someone, that they just said to do it this way, or they said to go ahead and take your gallbladder out that way, and they've never done it, they never went to school, they know nothing about it, they don't know the consequences, they don't know any of it, okay? Would you want them to perform surgery on you? Just think about that for a hot second. Now, if you want to be successful in Forex, you want this to be a business, you want to have a substantial income, or even just a livable income. Maybe that's all you want, and you just want to be able to have a life where you can travel or you can spend it with your families. Think about that example there, okay? Would you just throw your money out there and just follow anybody? I would not. Okay? So what is Forex? Forex is a commonly used abbreviation for foreign exchange. It is typically used to describe trading in the foreign exchange market by investors and speculators. Example: imagine a situation where the US dollar is expected to weaken in value relative to the euro. A Forex trader in this situation will sell dollars and buy euros. If the euro strengthens, the purchasing power to buy dollars has now increased. The trader can now buy back more dollars than they had to begin with, making a profit. Forex versus stock, okay? Forex is similar to stock trading in that a stock trader will buy a stock if they think its price will rise in the future, and they're going to sell a stock if they think its price is going to fall in the future. Similarly, excuse me, a Forex trader will buy a currency pair if they expect its exchange rate will rise in the future, and sell a currency pair if they expect its exchange rate will fall in the future. Okay, so it's based on the exchange rate. Currencies. Each Forex transaction involves two different trades: the purchase of one currency and the sale of another. That is why Forex quotes are quoted as a combination of two currencies, which is known as a currency pair. The most heavily followed and traded currencies are the US dollar, the euro, and the pound, GBP. Currency quote. When you look at a currency quote, you will notice that all currencies are quoted in a pair. An example would be the US dollar versus the Canadian dollar, so USD-CAD, or the US dollar versus the yen, USD-JPY. When you buy a currency, you are selling another, okay? The exchange rate. The exchange rate tells you how much you will pay or receive if you buy or sell the base currency, okay? Let's say that one more time. Exchange rates tell you how much you will pay, receive if you buy or sell the base currency. Now, that may sound confusing if this is new to you, but it's actually quite simple and it will click very quickly, all right? Especially once you get your demo platform up and you're actually getting into some trades, you're going to start to understand much quicker, okay? But I want to go over some terminology so you guys really understand, okay? And you know what you're doing when you open or close a trade. Standard format example, okay? The Euro USD equals 1.987. In this example, the currency to the left of the slash, the euro, is referred to as the base currency, okay? And the currency on the right, in this scenario, the US dollar, is the quote or counter currency. The base currency in this case, the euro, is always equal to 1 unit. All right, so 1 euro. And the quoted currency, US dollar in this scenario, excuse me, is what that 1 base unit, which is the euro, is equivalent to in the other currency. All right, so let me say that one more time. The base currency, or the euro, is equal to 1 euro. The quoted currency is what that 1 base unit, the euro, is equivalent to in the US dollar. Okay, so this quote is showing that if you wanted to buy the euro, you would have to pay 1.987 US dollars. Okay, if you wanted to sell the euro, you would receive 1.987 US dollars. Okay. Another example, all right, the US dollar yen, all right, USD JPY equals 1.6589. The US dollar is the base currency. JPY is the quote or counter currency. The US dollar is equal to 1 because it is the base. And if you wanted to buy the US dollar, you would have to pay 1.6589 yen. If you were going to sell the US dollar, you would receive 1.6589 yen. Okay. So here's a recap for you. Forex. You can write this down, you can take a screenshot, whatever you want to do. All right. I also have this information in the post. That is, the link should be included here in the video for you, okay? Forex is an abbreviation for the foreign exchange. All trading is conducted OTC. What does that mean? OTC means over the counter, okay? In other words, trade wherever you have the internet, okay? Historically speaking, who traded the Forex market? Was it just your average Joe? No, it was large institutions, corporations, central banks, hedge funds, and extremely wealthy individuals. In order to trade profitably, traders must what? They need to take the time to learn, study, and demo. Number 4, the USD is expected to weaken in value relative to the euro. What will the trader do? They will sell dollars and buy euros. Okay. A few more questions. The most heavily traded currencies are what? They are the US dollar, the euro, and the pound. Each Forex transaction consists of 2 trades. What are they? They're the purchase of one currency and the sale of another. Exchange rates tell you how much you will what if you what the base currency. All right. Exchange rates will tell you how much you will pay or receive if you buy or sell the base currency. 3, which is the base and which is the quote or counter currency in the example of USD CAD equals 0.9421. The USD is the base currency and the Canadian dollar is the quote or counter currency. Number 4, what does the above example quote mean? When I say the above example, this one right here. Okay? If you buy the US dollar, you would have to pay 0.9421 Canadian dollars. If you sell the US dollar, you would receive 0.9421 Canadian dollars. Okay? All right, take a break. We're going to go on to the next lesson next, obviously, and we're going to get a little more in-depth into the Forex market. Okay? I'll talk to you guys later, and you have a good one.